Hello and welcome. In this video, we will see what are the factors that affect the stock price. Okay, but before seeing that, let us see or let us learn about the different types of stocks. Okay, now these four are main types. Apart from these four, there are many other classifications too or types too, but I think knowing this is enough. Okay, now stocks based on ownership, market capitalization, dividend payment and price trend are divided into these. Okay, in ownership we have 3, in market cap we have 3, in dividend we have 2 and in price trend we have 2. So let us look at each one before learning the factors that affect the stock price. Okay, now based on ownership we have 3 classifications or 3 types. First is common shares or common stocks. Now these are the stocks that we as retail investors or traders buy on the stock market. These are the stocks that are generally traded on the stock market. Okay, now if we buy this share or if we buy these common stocks, we will get dividend. We will also have voting rights. Okay, we will also have voting rights. About this I'll speak in a minute. Okay, then comes preferred share. Now preferred share are also traded on stock exchange. That means you can buy preferred shares on a stock market in the same way you buy common shares. Common shares are the common ones that we buy or invest in. Okay, now preference or preferred shares are not available all the time. Okay, at some part of the time it is available, and whenever it is available you can buy it on the stock exchange through your broker. Now these preferred shares have some advantages over common ones. If you have preferred shares, you will get fixed dividend. Okay, but you will not have any voting rights. Fixed dividend, what is it? When the company declares dividend, the dividend is paid first to those who own preferred shares. Okay, fixed percentage, and after dividend is paid to people who own preferred shares, the rest of the dividend is divided among those who own common shares. Okay, so here people who own preferred shares will get fixed dividend, and what is left after paying these people is given to these. Okay, so if we have common shares, we will be given dividend only after it is paid to those who own preferred shares. Okay, and this is good, correct? Fixed dividend means fixed income. You have fixed income, and due to this advantage they do not get voting rights. Alright, and so those who own common shares get voting rights because they are given dividend after it is being paid to preferred share owners. Okay, next, priority in liquidation, meaning if at all the company goes bankrupt, okay, what do? They sell off all the assets, whatever they have, and they repay the money to the investors. And when they do that, these people have higher priority than these. So if you own preferred shares, then if the company of which you own share goes bankrupt, then the company will sell all their assets and pay you first before paying the people who own common shares. Okay, so less priority in liquidation. So here priority is more than these. Then we have hybrid. These are preferred stocks which come with an option to be converted to common stocks at some particular time. Okay, now do not worry about this too much for now. Alright. Next, based on market capitalization, we have three types. One is large cap, mid cap, and small cap. Okay. Now, once again, market capitalization is a topic in itself which is very lengthy and cannot be explained here completely. But just know that if the company's worth is more than 20,000 crore, then it is said to be a large cap company. If the company's worth is between, or if it is more than 5,000 crore to 20,000 crore, then the company is mid cap company. But if the company's worth is less than 5,000 crore, then it is a small cap company. And shares of these companies are large cap stocks, mid cap stocks, and small cap stocks. Okay. Next, based on dividend, we have two types of stocks: growth stocks and income stocks. Now, as we have discussed before, dividend can be used to do many things. If the company reinvests their earning to promote growth of the company, then it is called as a growth stock. Okay, the stock of that company is called as growth stock. Whereas the companies which distribute their dividends regularly to their stockholders are income stocks or income stock companies. Okay. Now these give stable returns and are less risky. Okay. Income stocks are stable returns and less risky, whereas growth stocks are risky when compared to income stocks. Mind you that these are of different companies, okay, not same companies, different companies. They are risky because the earning is reinvested to promote growth, and we do not know whether growth will happen or not, whether the decision made by the company will be right or wrong, and so they are risky. But if everything goes well, if everything goes according to the plan of the company, then investors earn through capital appreciation, which is nothing but a rise in stock price. Okay, these are stable, these are risky. Next, based on price trend, we have cyclical stocks and defensive stocks. Now, these stocks are affected by economy of the country. Okay, it depends on the need. For example, for some time the steel may be in demand, so the stocks of the companies which produce steel will be in demand. For some time, automobile sector may be in boom, may be in demand, may be growing. So during that time, the stocks of automobile companies will be growing, and so on. But if for some times infrastructure or if the demand for steel comes down, then the price of the stock of steel manufacturing companies will come down. So depending on economy of the country, the price of the stocks fluctuate. Okay, and then there are these which fluctuate less with economic condition, meaning they are in demand all the time. For example, pharmaceutical stocks, medicine, they are in demand all the time. it doesn't get affected by economic conditions because the medicines are required all the time, correct? Then we have FMCG, fast moving consumer goods, milk, tea, coffee, all these water bottles, all these are in demand all the time. So they are less affected by the economic conditions. Alright. So these two comes under the classification of price trend. Apart from what we have learned, there are few more classifications too, but right now it is not necessary to learn all of those. Okay. So these are the different types of stocks. Now let us see the factors that affect the movement of the price of the stocks. Okay. These here are the factors affecting the stock price. Demand and supply, fundamental factors, economy, government policies, political scenario and dividend declarations. Now let me explain you briefly how these affect the stock price movement. Okay. First is supply and demand. The stock market works on the principle of supply and demand. These are the two factors that drive the price of a stock. Okay. When the demand for a particular stock exceeds its supply, it means that number of buyers for the stock are more than the number of sellers. This creates a price hike or rise in price, since the buyers are more willing to pay and purchase the stock. Okay, pay more to purchase the stock. The opposite is also true. When the supply of a particular stock is more than the demand, then it means more sellers are there than the buyers. Now this will take the price of a stock down, meaning people are ready to sell it at whatever price the buyers are willing to pay. Okay, and we have seen how big players affect the stock price movement by buying or selling. Correct? So this is the first factor which affects the stock price movement. Next is the fundamental factor. Now, the financials of a company is called as fundamental factor, and it is also one of the most important factor affecting share price. Investors will generally study the financial statements before investing in the stocks. Okay, so if a company doesn't have a good financial, then investors will take out all the money or will not invest in that company, which will bring the price of the stock down. Okay, whereas if the financial is good, then we have more buyers for that company, and so there is a demand and the price moves up. Okay. Third is the economy. Now economy means the country's economy and the outside economic factors too. Okay. So if the country's economy is good, then generally investors will have a good hope that the price or the stock price will move up, and so they will keep on investing. Whereas if the country's economy is down and is not good, then investors will start removing money from the market and will look for alternative safe option. Okay. Now we have learnt about the FIIs and DIIs also, correct? Now, if there is any clue or cue that the country's economy is showing a slowdown, then it discourages the FIIs and DIIs to invest in the stock market too. So what they do is they start removing the money from the stock market, which ultimately brings down the price. Okay? Now, any major events outside the country also affects the stock price movement. For example, wars happening. Okay? So there is a war going on between Russia and Ukraine now. When it started, the stock price started coming down. When the COVID started, the market came down. Okay? So it is not only the economy of the country, but the global economy also affects the stock price movement. Okay? Next is government policies. Now, policies of government also play major role in share price movement. Okay? If the policies announced by the government are perceived as favorable by the investors, then the share price of the associated industries or sectors goes up. Okay? But if, let us say, for example, government imposes more tax on any particular sector, then people will see it as a negative and will start removing money from that particular sector. Okay? This will lead to sell off and which will bring the share price down. Okay? Next is once again political scenario. Political scenario is similar to economic scenario. As I said, political scenario mainly means if there is any war, if there is any global pandemic, if there is any turmoil outside the country, then it will affect the share price. Okay, whereas if everything is good is happening around the country, then it will drive the price up. Okay, so this is related to economy of the other countries too. Next is, or last one is dividend declaration. Now this doesn't affect much on the share price. Okay, but dividend declaration affects the price. Okay, now price of a company tends to rise when the declaration of dividend is done. This is because investors generally perceive companies declaring dividend as being financially strong and stable. Okay. However, if the declaration of dividend by a company doesn't meet the expectation of investors, it increases the likelihood of share price going down. Okay. So these are the major factors that affect the price of a stock. Alright. Now this is not the complete list of factors which affect the stock price movement. Apart from the ones that are mentioned here, there are various other factors too which affect the stock price movement. Okay. Human emotion being one of them. So if the market sentiment is bearish, meaning negative, then the price of the stock or stocks comes down. Whereas if the market sentiment is bullish, meaning positive, then the share prices goes up. Okay, so the human emotions also play a role in the stock price movement. And as I said, apart from all these, there are various others too, which you will learn slowly as you move through your journey of stock market. Okay? Yes. So I hope it is clear. I hope you have understood the different factors of stock market, and I hope that you will choose the stocks wisely while investing. Alright? So I'll see you in the next video. Till then, take care and thank you for watching.